It is no longer a secret that over the last many months, India's share market has shown much healthier growth compared to its Asian and Western peers. More and more people are now investing in Indian stocks, with more than 77 million new demat accounts being opened in just 1 year. But what about NRIs? How can they make investments in the Indian stock markets? What are the formalities, rules, or restrictions? We have the answers. But first, who is an NRI or a non-resident Indian? For the purpose of equity investments, a person who has stayed in India for less than 182 days in the preceding financial year is categorized as an NRI. The purpose of your stay outside of India in the current financial year, if applicable, is also taken into account while deciding your status. Once your residential status is clear, you will need a bank account in India to begin investing. For this, you can choose an NRO or an NRE account. Nowadays, opening either of these is a fairly simple process, and all leading banks can process remote applications. A major difference between the two is that an NRE or a non-resident external account is repatriable, which means that it allows you to transfer your funds out of India. But an NRO or non-resident ordinary account is non-repatriable beyond current income of less than $1 million in a financial year. If you plan to make your investments using Indian funds through an existing NRO account, you can directly open a demat account and start trading through a registered broker of your choice. But if you wish to use foreign earnings to trade in India on a repatriable basis, you will have to seek a PIS authentication for your NRO or NRE account through your bank. Once your bank account is PIS enabled, you can link it to a demat account and start investing like any other Indian citizen. Tax implications for an NRI investor do not depend on their residential status. A stock market investor is liable to pay capital gains tax on the sale of their assets, the rate of which depends on whether you hold the stock for less than 1 year, that is short-term capital gain tax, or for more than 1 year, in which case you pay the lesser long-term capital gains tax. While investing though, you may need to keep in mind the fact that NRIs are not permitted to engage in intraday trading. Also, different Indian companies have different limits as to how much investment they can get from an NRI or a PIO investor. These ceilings are widely publicized by regulators and markets on their websites, and you should cross-check these before placing an offer. Indian markets present an exciting opportunity with new and bigger IPOs lined up every year. Hope this video helped you get clarity on how to be a part of this growth story as an NRI. Keep following this space for more such videos. I'll see you soon.